every once in a while, we come across a deal that checks all the boxes: cash flow, growth, and low competition in an area. This today is going to be one of those deals that we're going to be talking about. John and I, we're going to be going over 60 Jane. This is a new deal that we have in Atlanta. It's actually just south of Atlanta. We're going to be diving into all the details, what the upside is, and how we actually found this deal moving forward. John, it's great to be here with you.
So good, Mark. We've said it a bunch, right? But that 300 to 1 to find that one winner, that one diamond in the rough. And this is such a great example of that. This property I'm like a little extra special excited about because we really have three different, offerings for a potential resident. We have townhomes, we have quads that have a kind of a single family feel. You've got your private parking space, and then we have flats, your typical sort of style apartment. So, that ability to offer, something that would work for everybody. But the biggest thing, man, is the green space. This property is so huge and the density is so low. It really feels like a community. You get that like single family ownership feeling, but at a rental rate, right? So, yes, super excited to dive into this property today.
Yeah, that was the biggest thing that really grabbed my attention. And there's the opportunity to build more. Like from a zoning standpoint, we have that opportunity to actually, I believe it was 8 units is what we have that we can actually go and build. So that does add extra value if you have space within the acquisition that you can actually build if you want to. Now, this is something, as you mentioned, John, like feels like a whole community that you're buying, in the sense that there's a public road actually going right through it. And so it feels like an actual neighborhood versus like an apartment complex. And so there's per unit, there's a much greater acreage per unit, which is actually really great for the residents, that this is going to be a very unique offering that they can come in and live here and not feel like they're in, we'll say, typical apartment style living where, it feels so tight and, you have people all around you. And so that is more of we'll say a soft attribute that is hard to apply direct to return on investment. But this is the really cool thing, is that not only does this have that we'll say soft attribute there in regards to the amount of acreage per unit, but all the data points point to a very strong, we'll say, upside in this deal as well. So the data points to it to being a very strong deal, but you get all this additional upside in the overall feel when you drive into the community. And so, that's I'm really excited for that. I'm excited for the numbers as well and the potential upside that we have in this deal when looking at the competition.
That's right. So just like a quick snapshot. So this is 114 units. It is located in Coweta County, as you mentioned, just south of Atlanta. It's actually in a path of progress. There's a lot of manufacturing being built in this area. It's not far from the big film studio where all the Marvel movies are filmed in Atlanta. So that's exciting. That kind of is attracting people to this area. This complex was actually built in 3 phases. I mentioned there's sort of 3 unique styles of building. So the quads were built first, then the flats, then the townhomes, 1986, 92, and then 1998. So these are newer vintage. So we're not dealing with any, potentially problematic building materials. The unit sizes are larger. That's one of the reasons we like 80s, 90s, and early 2000s. As the cost of materials have risen, developers are building smaller units. And so that's something we really like here. A lot of space. And it's sort of an underserved tenant base in the sense that what's happening in Coweta County, Mark, as you know, is they are very conscientious of not overgrowing too quickly. Now, here's part of the reality of Coweta County. In fact, in Newnan itself, they've had over 20% population growth over the last 5 years, and they're projecting like another 10% population growth over the next 5. So it is a fast growing area, but the, local politicians want it to be thoughtful growth. So they've actually made it very difficult to build new multifamily apartment buildings. What they're more likely to approve are build to rent single family home communities or build to rent townhome communities, which come at a much higher average rent. And so we can offer something that feels like that with our quads and our townhomes. at a rent that feels like, they're getting a savings, but after we execute on our business plan and our Class A renovations, it's going to have all the same features and benefits of that newer at a much lower cost. So for example, Mark, some of these single family rental communities, they're like starting rents like $2,600, $2,800, right? And we're like $1,800, $1,900, $2,000. So we love that. The in-place rents are below market value. And the most recent owners have renovated 16 units. Now, I would say the renovations are okay. They're not the standard we would do. And they're achieving $380 rent lift on what I would say is, once again, an okay renovation. So when we implement our like top of the line renovation, we're performing at that kind of rent growth, but I have no doubt we'll exceed it based on our premium renovation. Another factor here is there's a lot of long-term tenants. So residents, I should say. So they're looking for maybe just better management and a better experience, which is part of our full out experience that we offer at Faris Residences.
Yeah, right on. And John, before we get into the 5 top reasons and talk a little bit more about the deal, let's talk a little bit about how we actually got the deal. I mean, that to me is something that if you're awarded one of these deals, it's we'll just say you're awarded the deal. It's not like you purchase it. The broker actually needs to do a deep vetting process on who they're actually awarding it to. And once you get it, these are like trophy assets. So we were in competition with many other operators. And so maybe we talk a little bit about the story kind of leading up to it so that the listeners have a better understanding of how we were able to acquire this trophy asset.
Absolutely. So we're huge on broker relationships. So I live here in Atlanta, but it's a newer market for Faris Capital. So starting about a year ago, we started reaching out. Joe, our acquisitions, senior VP, came into town. We went out and met all the brokers. Now, Joe, with his extensive experience, he's closed over $1 billion in real estate transactions in his career, had done business with a lot of these brokers, but introducing ourselves in Faris Capital Partners, we bring a small gift, we get to know them, we learn more of what's going on in their world and just tell them a little bit about what we're looking for. But we stayed in touch with this. Now, Cushman & Wakefield is the brokerage team on this deal, and they are the dominant players in Atlanta. So we had a couple other opportunities that we pursued with them that just didn't work out for one reason or another. In one case, a buyer swooped in at the last minute with a 3-week closing, and, it was an unfortunate situation, but we just couldn't compete with that timing frame. And then on a second one, the seller changed their mind. And so in a fun way, like we didn't beat them up, but we leveraged that a little bit. We said, hey guys, let's get this one together. But bottom line, like when we do our unit, walk and we do our property tour for the first time, we do an extensive inspection, like our construction managers there. We walk through every unit that we have access to. We check every compressor. We're looking at the roofs. And so we put our best foot forward with a great offer. Well, what ended up happening is we made best and final, which was fantastic. We did the buyer interview. And then the seller sort of threw a curveball. They said, hey, we have this unique thing we want to try. And it was sort of an entity trade versus a fee simple property sale. But the bottom line was, I think how we won the deal is we were open to that conversation. We ultimately decided mutually not to go that way. But I think by seeing that we were willing to work, put our heads together, come up with a creative solution, that showed them that, look, these guys are serious and they can perform. So I think that's really what won us that deal. And, started with the broker relationship and then started with that, just being easy to work with, looking for creative solutions while looking out for our best interests and our investors' best interests.
Yeah, you got it. So, I mean, that was the team navigated through that really well. Everybody pulled together. And, we gave the broker the peace of mind knowing, yes, we can in fact close. We have a track record of closing on these deals. And, the relationship is really a big part of that as well. There needs to be a high degree of trust to be able to take these down. And so this is where, now that we have the asset under agreement, we have some pent up demand coming off of our last deal, because that filled up within a few weeks of us launching our Georgetown deal, John, as you know. And so we're looking at, from this, there's some really good pent up demand. And so the asset's going to be filling up fairly quickly here. So, but John, let's get into top 5 reasons. We'll dive in a little bit more, and then we'll be able to wrap this up and then make it very clear what the next steps will be if you want to learn more about this investment opportunity.
That's right. Number one, population and income growth. So I sort of touched on this, but Coweta County's had a 20% plus population growth in the last 5 years. But in a 1 mile radius of our asset, it's been 17.8%. So just within a 1 mile radius, they've seen that explosive growth, projected to grow another 12.9% over the next 5 years. So steady demand as more and more people continue to move in. Strong median income at $85,000. So the rent we're going to be offering will fit well within our goal of below 35% rent to income ratio. But also what's happened is, like a lot of areas, right? After the pandemic, we've seen an explosion in the average home value. So its average home value since 2019 in this area has increased by 48%. So it's pushing more and more people, more and more families into rentals. So, we always invest where there's growth, where there's economic diversity, and where there's strong income. So this checks all of those boxes.
Yeah, right on. The second one here is very little to no competition coming in to the area. And so there's only 100 new multifamily units that were delivered in Coweta County in 2024. So moving forward, we track the number of new permits that are issued. And John, as you mentioned, this area they want to be very strategic with their growth. So it's not something that they're slapping out and giving out permits and ability to build in around the area, which is really great for our model, because when you have incoming demand for population, people are coming into the area, but they're not building to be able to keep up with that. That means the existing inventory is more constrained, which drives up rental pricing. And so this asset is positioned extremely well moving forward. And so that's where you want to buy in areas where there's very little new supply coming, and we can project out, we can see what the permits are, and we can look out a couple of years before those are delivered in the market. So the timing on the execution of this business plan and the location and all the other variables positions this as an extremely strong place to be able to invest a dollar.
That's right. Number three, that clear value add potential. Like, we love to see 100% classic. So this one does have, of the 114, 16 have been renovated. But once again, I would say they've been renovated about 80 to 85% of the way we would take them. So we actually will go in and kind of finish the job, so to speak, on those 16, but we'll be renovating the rest of the units. But in full classic conditions. So it's amazing to see that. With those renovated units, they're already achieving a $383 rent premium over the classic. So it's a proven thing. It's not something we're speculating on or trying to predict on. Like, we have data that they're currently executing on their plan. So that's the number we're leveraging for our pro forma, but we think we'll exceed that based on our even better renovation. And we won't be spending a fortune to get there, right? We're going to be spending about $15,750 per unit. We'll be replacing the countertops, putting in new stainless steel appliances, all new lighting and plumbing fixtures, replacing the fronts on the cabinets, new hardware and new flooring, new paint. So it'll feel like a brand new Class A unit by the time we're finished. And then we're going to be enhancing the amenities. We mentioned the large green space. So the green space is where the pool is. There's actually a walking trail. They have the little doggy stations around the walking trail, along with a few sort of like outdoor gym workout equipment. So we're going to make a little more sense. It's kind of spread around now, so we'll move some things around there. We're going to add in some new pool furniture. And then there's a playground. We're going to enhance that a little bit. And there's an existing basketball court. But what we're going to do there is actually transition that into a pickleball sports court, which is a little more popular today. Mark, candidly, unfortunately, basketball courts sometimes attract non-residents to the community. People will come in to play basketball, and that's just not something we like, right? We want our residents to feel like safe and secure, and that it's their spot, and that they don't have to worry about people from outside the community coming in. But once again, pickleball is very popular right now, so we think our residents will love that. So that value add potential is so clear and so strong. That is the number three reason we love this deal.
Yeah. And the next one here is the undervalued asset, but in a high quality, safe location. So it's a phenomenal location from a safety and, overall family friendly. This is going to be working class, but somebody can go and live there and feel completely safe and feel like they're not on top of each other. I'd mentioned in regards to the acreage, you have talked about that as well, but in addition to the different, we'll say, styles of apartments as well. So you have the townhouses, right, which is a typical, it's all main floor access. And then you have quads, which are like, basically it's a large bungalow split up into four different homes or four different apartments. And then we have the traditional stacked apartments there as well. So there's very good, we'll say, diversity in the styles as well. So that when somebody comes, they and rents, there's, we'll say, less competition from the style that they want. So in most traditional apartments, you have, say, 114 units of the exact same unit. And the property sits on nearly 16 acres with walking trails, not only around the area, but also right through the property. There's this beautiful walking trail right in the middle, and they have this little workout set up. So not only do you have walking trails in around, you have it actually on the property as well. So it really is a lifestyle that the residents will get access to.
Yeah. And, one additional point, it's about a mile to downtown Noonan. So, and, it's actually sidewalks along the way. So, theoretically, a family could walk down to downtown Noonan, grab some ice cream, grab a bite to eat. They do farmers markets, community events. They have a square there where the courthouse is, where they have concerts in the summer. So, all that is right there. And not far from the property as well are a series of walking, jogging, and biking trails. So just amenities even outside the community that our residents will love. So location, 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 right? It's so strong.
And yeah, you have Amazon, Yamaha, you have the hospital close by as well, parks, you have, schools all around it as well. So it really is a desirable spot to live. And so when you're buying an asset in an up and coming area that's close to employment, that's safe, it really does help with your overall appreciation moving forward.
That's right. Number 5, there's a big opportunity here to turn around the operational efficiency. So one of the things, we have, for example, our Georgetown deal has great reviews. People seem to like living there, which is great. We're fine with that. But what we really love is when we see an opportunity just to pick up the level of service and check some easy boxes and get some easy wins. And by that, I mean just being available, making sure the leasing center is fully staffed. Mark, we did 2 tours, or I personally did 2 tours. And in both cases, the property manager wasn't on site. In one case, she actually ghosted the broker. So the broker and I were like he's all embarrassed looking around. Well, how are we even going to get in the units? So we had to track down the maintenance supervisor who gave us the key to get into the units. And then the second time, to be fair, she was at court. She had some eviction business to handle, but there was no feedback to the broker, right? So we find out when we show up. They've cycled through 3 PM companies in the past few years, and there's some bad debt because they were letting some tenants in with not the best screening process. Now, they're cleaning that up, but at the end of the day, it's just we can institute our full out approach. Our mission at Faris Residence is to go full out for our residents to provide that best living experience in the world. So we'll implement that playbook immediately, the culture, the guarantees, all of those things, and make sure our leasing center is always open and available for not only prospective residents, but current residents who may have a maintenance request or, just want to talk to the property manager about what's going on at the community. And so we love when we see that because that's an area where we really thrive. We're big on system, we're big on process, and we're big on culture. So that'll be the first thing we do along with our 28-day transformation. So that in and of itself will create some upside as we have just better operational efficiency.
Yeah, you nailed it. So yeah, why we're comfortable moving forward with this. I mean, amongst everything we said right now, this market is just outside of Atlanta. And so this is an up and coming area, and there's little transaction volume that's actually happening. So there's not a lot of sales that are actually happening. So to get this offering and to be able to take advantage of it and to have our investors that can actually get in, this is a very, very rare offering. Generally, they're institutions that are going and wrapping these up, and the average high net worth investor just can't get direct access where you're coming in as an actual partner, benefiting not only from the cash flow, but also with the ongoing growth, with no sort of cap of what you can make from that investment. The other thing is that the tenant base, the resident base that we're going after here, this is workforce. They're the everyday workers. So we're talking about hometown heroes. We're talking about firefighters, police officers. These guys, they're amazing, and that actually segment of the market is actually growing. Less and less people can afford the $25,000 to $3,000 a month rental rates. And so, John, you had mentioned that it's like in that 16 to like under 3 bedrooms, once we renovated, like 2,200 on the top end. And so this is much more affordable. And so affordability is something that market is growing more and more and more. And then you had mentioned in regards to the ability to execute on this business plan. From what we've seen, we see some really strong upside by us going over and actually operating this with the Faris stamp, with that full out stamp that we're going to be bringing into it. And so, John, you had mentioned this, the rents are proven out to be able to get those $300 a month more per unit per month in rent. And then not only that, you have the operational efficiencies as, the property manager, and making sure that not only are they friendly, but they're on the ball in regards to driving the operational excellence of it as well.
That's right. So kind of what comes next? I think that's the question you may be asking yourself. So this is kind of the teaser, right? We're letting everybody know this deal's coming. So in the coming days, we'll be releasing our full investor deck with our business plan, walking you through every detail. We'll have an investor portal set up where you can review the documents and learn more. Bottom line is, this is an incredible opportunity you don't want to miss. This is for accredited investors. So you have to be accredited in either the US or Canada in order to invest. You can Google search that term, but in simple terms, there's an income of either 200,000 or 300,000 combined with your spouse, 1 million in liquid investment assets, not including your primary residence, or 5 million in total net worth. So if you meet that requirement, you're eligible. You only have to meet one of those requirements, to be very clear. And we do have a minimum investment of 100,000. Distributions are projected to start in the first 3 to 6 months. Our goal is always to get there at 3 to 4 months. But we do a catch up. So this deal is already cash flowing on day one. So it's already profitable. So on that first distribution, we'll catch you up back to closing. And then those ongoing monthly distributions will continue. And once again, there's already strong cash flow and that appreciation opportunity, not only through just the natural appreciation that will occur of the building itself, but through the forced appreciation we'll accomplish through the execution of our business plan. So this is not a deal you do not want to miss. I would encourage you, if you're hearing this today, to go to fariscapitalpartners.com. There's a button to get on our deal list. So you'll see this the second we launch it.
You got it. And John, moving forward, we're going to be going over, we have some new share classes. So this is really exciting. We're going to be talking about that in the next episode. So if you're interested in this and you want to hear a little bit more about how we're structuring our share classes, we have a new edition coming up. So make sure you check that out. Thanks for listening, guys. If you enjoyed the show, please share and subscribe to the channel, where we are building a community of high net worth investors. We love and believe in you guys. Keep dreaming and investing big.